Excuse me. Good evening, Mr. Trader here. We're going to go over Amazon, Netflix, Tesla, Nevada. I think that's how you pronounce it. Apple, and Meta, Facebook. So we'll open up Amazon. There. The green line's my 5-minute high and my 5-minute low. I've been working on that for a little bit, but Amazon opened up pretty good this morning. We hit 105.96, and then it kind of trembled down a little bit, and then bounced back up, and then down again, and then up, and then straight down. So if I was trading this, I would, sorry, I've been changing stuff on this. Apologize. There we go. We got the option chain pulled up. If I was trading it, I probably would have bought the 105. There it is, 105. It opened at 85 cents, and it went almost to $1.96. And the low was 60, and that's probably from the downtrend. Well, then there's something missing here. I'll go in here and add volume. Customize, look up. There we go. Volume. Add. Okay. All right. Now we got volume. I like volume. It lets you know how many contracts are being bought and sold. All right. We'll go back to chart. Minimize that. All right. Here's Netflix. It's running a little slow, but that's all right. For some reason, my lines ain't working very well. Might have to change them. So this opened up underneath the 5-minute low. So technically it should have been here, but it's actually coming off over here from yesterday, the high. And let's see, well, we got a nice little uptrend. Had a nice for a little scalp. Could have scalped that from the opening and sold here. I didn't scalp it again. Bought puts down. I didn't buy calls again and back up. And puts again. That would have been a nice, easy trade today. Let's take a look at the option on it. Oh, why is that still showing Amazon? There we go. Here's Netflix. All right, now we're loaded. See, that would have been perfect. The 332.50 would have been perfect. It opened up at 48 cents, and the high was $1.35. Had a nice little volume on it. I don't know. I like playing it out of the money options. They're risky but high reward. So yeah, I just say if you have bought, so that would be $48. So if you would have bought 10, if you bought 10 of those, would have been $480. And if you sold that at the $1.35, that'd be 135 times 10. That would have been 1,350 you would have made off of that today. Not bad money for a 30-minute trade. That's what we like. In and out trades. All right, now we'll go back to charts. Minimize this. Restore sell. All right, now we got Tesla. Tesla, right out of the gate, like boom. We stayed up for a little bit, and then it dropped. Stayed up, and then it just fell after hours. I think they had earnings, didn't they? I'm not for sure. Uh, no, nothing today. So let's take a look at the option on that. We'll look at the put side too on this. Too far. So here's a good example. So the 170, opened up at $44 and it ran all the way to 108, but it had 91,396 volume. That's how many contracts were bought and sold at that strike price, the 170. Now, let's take a look at the put side. Put side, probably down here. Put side, not really too much. Probably this one right here. Because, see, it opened at 201, but the low was 61. So when, like I was showing you on that chart, where it was dropping, when it dropped, you could have bought at 61, and look at it. The high for it is 203. So yeah, it, it opened at 201. It dropped all the way down to 61. And then once it started dropping after you purchased at 61, you could have sold it anywhere between 142, 135. Not bad. So you could have bought right here. You could have bought here right before close. Right before close, you could have bought your put and just let it drop after hours. And then maybe tomorrow morning, it probably would keep the downtrend going. It's hard to say. Let's take a look at this one. This one had a crazy move yesterday. Like really crazy. I don't know why my charts are doing this. Might have to reset them. So yeah, look at that. Look at that downfall from open. And it tried to recover from yesterday's high, but nah, it didn't do it. Take a look at this option. We're just gonna look at the put side. So this one opened up at 96 cents. And the high was 157. The low was 30. So you could have watched it and played it out. Could have probably bought in at $30 and probably sold at the 157. The volume is okay. That's real low. But look at the volume on this one. It's got 40,000. The volume on that one's 20,000. I like to look at volume. If it doesn't have over 1,000 in volume, I wouldn't even touch it. Like this one right here, the volume's real low on it. But you never know. Sometimes you can find them gems that has a really low volume, and once everything starts moving, people will come in and start buying in, and sometimes it works. My thought, I think this one will keep going down tomorrow. All right, let's take a look at Apple. Crazy ride, straight from the opening, kind of bounced up and down, and then right before close, drop. I think Apple's got earnings tomorrow. Yeah, earnings. Earnings, yep, tomorrow after market closes. Earnings conference call. Yep. So let's take a look at the trade on this one. So right from open, you know, not really much. I like to see. I like the small amount so you can buy a lot more contracts. You know, $74, 10 of those is $740. If you bought 20 contracts at that price, that would be 1480. And that 1480, you know, that was like 2000 something, almost close to 3000. I'm pretty sure. It's all good, you know. You learn as you start trading. But I like the cheap plays. The cheaper costs, like I said, they're risky, but they're high risk. I mean, high risk, but high returns too. Especially if they move. Like back in the day, Amazon used to move like crazy. You could buy an option for like $20 and turn around and sell it for $300 to $500. And that was probably back in 2016, 2015, 2016. I made some good money off of Amazon back then. And I got greedy. I ain't gonna lie. I got greedy. Uh, yeah. So on that, if you had 20 contracts on that and you sold out 179, your 20 contracts would be $3,580. I know it sounds like I'm rambling, but I'm kind of new to this, but it's all right. I mean, I'm new to making videos. I'm not new to trading the market. It's just I never really thought about, sharing my stuff with people or what I think. But I think Apple's going to beat the earnings. But I think Apple's going to be in the downtrend tomorrow all day. So I would pick the way I would play Apple for tomorrow. Let's go. Hold on. Let's go back and trade. I think I screwed up, guys. Yeah. See, I didn't even put Apple in here. Uh, you guys didn't yell at me. My bad. See, I'm so used to these connecting. That's what I'm going to do. That's see, I told you I'm resetting everything up. So what I'll probably have to do, I'll probably have to connect each option chain to each chart. But man, my bad, guys. Like I said, I'm on a, I'm resetting everything up. I'm start getting back in trading. Uh, I'll do some live trades probably in a month or two. Just kind of, excuse me. See, apples are kind of nothing really, not really, no really plays on here. But the way I would play Apple for tomorrow, I would keep your eyes on the 170 strike price to buy a call. Let this get down around about the $1.50 range or less, and then buy that. But then also at opening, I would buy the 155 put right here. I would buy the 155 put because I know in the past when Apple had earnings, they would sell off all day long till the earning time. So I would buy puts, the 155 puts. I would buy it, play it during the day, and then the 170 because as prices over here go up, these prices over here go down. So I would buy 155 at open, and I would buy the 170 probably about midday, maybe around. It all depends your time. I would say maybe around 10:30, 10:30, anywhere from 10:30 to 12 o'clock, maybe 1 o'clock. So so, but I would sell the 150. I would sell the 150 before close or whenever you have profit. but I think Apple's going to beat the earnings. So Friday morning, you hold on to the call, the 170 call overnight. And this is how I used to play it. So I would hold the call overnight, and then Apple would open, and it would just jump so high. And and they say, if you got this for 85 cents, so $85, and you had 10 contracts, that's 800, 850 bucks, you know, 10 contracts. And you can end up selling it, for 3 grand, maybe 4 grand. It all depends how quick it'll move and how high it would jump. Because I know in the pre-market, that starts about 4:30 in the morning. That's my time. Between 4:30 5 a.m. You can get in there and you can start watching the pre-market, and you kind of get an idea from the pre-market where, because you'll see how low it will go and you'll see how high it's going to go. And that tells you that's how they're going to trade during the day. That's just how it used to be back in the day when I was trading. So I like it. All right, Facebook. What we got? Let's see. I'm not trying to buy nothing. See, if I would have bought, see, I'm not trying to spend 24 grand on trading it, and that's just for common shares. Sorry, my computer's lagging. So you see, Meta slash Facebook, it just went. I mean, here's open. So 8:30 my time is open, and look, it just kind of went up. I mean, it didn't do much, and then right at 12 o'clock, I think they had. Did they have earnings today? I don't know. I don't think so. They probably did. But look at that drop. Here, let's blow it up so you can see it a little bit. So you see that? Look at that wick on that candle. I mean, just bow, bow, and look, it just kept dropping. And this is at 12:05 my time. And look, something bad happened for a major drop like that. It's major news. But also, here's another thing um, that I learned is you don't ever want to buy the news. You want to sell the news. Whatever news coming out, you want to sell it. Sell it. Never buy it. I learned that the hard way. So here's the option on. I'm gonna just keep calling it Facebook. I'm sorry. Old school. So look at that. I mean, it opened up at 55. The high was 205. And probably that was from where that big old candle that was dropped this afternoon. See, boom, you could have bought that for, and technically when it went up, you could have bought that the 230 put. You could have bought that at for 27 cents from like the opening and just ride it, and then you could have sold that for 205 for the high. That's crazy. Or even this one. So it opened up at 91, but look, 45. You could have bought that at $45 and sold it for 300. So you figure 10 contracts, 300, that's 3,000. If it was 20 contracts, that's 20,000. I mean, 60,000 or not 6,000. Sorry, but yeah, I mean, it's a major money maker. Options are a money maker. You have to be disciplined. You have to be ready, and you got to be ready to pull the trigger either way. Make sure you got your stop loss set. So not bad. So like this one, you know, what is it? The 242.50 call, $48. So and it probably opened up at 196 and ran to 255. But yeah, I mean, trading the stock market, once you learn it and understand it, you can make really, really good money. It's like, it's crazy. It's weird. So that's all I got for the day. Thank you for watching. And remember, this is Mystery Trader, and mystery is the game. You always want to beat the MM. That's what they call them, the money makers. And you'll see it once I start um, showing you, live trades and videos and stuff. I'll kick on the L2s, and I'll point out the money makers. They're the ones that pushes the market. They're the ones that's pushing the stock. They're the ones that's selling the stock off. You got to beat them at their game. So, thank you for watching, and I'll see you next time. If you like the content, hit the like button, hit the subscribe button. I'll have more coming out. Thank you.